Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 22nd, 2026, and we're diving into Huntington Bancshares' recently released earnings report for the fourth quarter of 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Huntington Bancshares has delivered a comprehensive report, and I'm excited to break down the details with you.
EPS and analyst forecast. Let's start with the earnings per share. Analysts had forecasted an EPS of 39 cents based on a survey of 10 analysts. However, Huntington reported an adjusted EPS of 37 cents. John, how does this compare to expectations and previous performance?
While the adjusted EPS of 37 cents fell short of the forecasted 39 cents, it's still an improvement from the year-ago quarter's adjusted EPS of 34. The GAAP EPS was 30 cents, which reflects acquisition-related expenses and other notable items. This indicates that despite missing expectations, Huntington has shown some growth compared to last year.
Revenue and profitability overview. Moving on to revenue and profitability, Huntington reported a net interest income of $1.592 billion and non-interest income of $582 million. The net income for the quarter was $519 million. John, what are your thoughts on these figures?
Huntington's net interest income increased by 6% from the prior quarter, driven by a higher net interest margin of 3.15%. However, non-interest income saw a decrease of 7% from the previous quarter. Despite these mixed results, the overall net income of $519 million reflects a solid performance, although it is a 17% decrease from the prior quarter due to acquisition-related expenses.
Strategic partnerships and growth. Huntington has been active in strategic partnerships, completing the integration with Veritex Holdings and anticipating the closing with Cadence Bank. How are these partnerships impacting their growth strategy?
The Veritex partnership has already contributed to significant growth, with average total loans and leases increasing by $10.7 billion and deposits by $8.3 billion. These partnerships are crucial for Huntington's expansion, particularly in high-growth markets like Texas and the South. The upcoming Cadence partnership is expected to further bolster their growth trajectory.
Credit quality and capital position. Credit quality and capital position are always critical. Huntington reported a net charge-off rate of 0.24% and a non-performing asset ratio of 0.63%. How does this reflect on their financial health?
Huntington's credit quality remains strong, with a slight increase in net charge-offs from the previous quarter, but a decrease from the year-ago quarter. Their CET1 ratio of 10.4% and a tangible common equity ratio of 7.1% indicate a robust capital position, providing a solid foundation for future growth and risk management.
CEO commentary and future outlook. Steve Steinour, Huntington's CEO, provided some insights into their future outlook. What are the key takeaways from his commentary?
Steve Steinour emphasized the bank's focus on driving strong organic growth in 2026, leveraging their strategic investments and partnerships. He highlighted the excellent momentum they have entering the year and their robust backlogs and pipeline, which position them well for delivering exceptional profitability and long-term value.
Key takeaways. In summary, Huntington Bancshares has delivered a mixed but promising report for the fourth quarter of 2025. With a net income of $519 million and adjusted EPS of 0.37 cents, they continue to show growth in loans and deposits. Thank you for joining us, John, and thank you to our viewers for watching. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Huntington's performance in the comments below.
Thank you for having me. It's been a pleasure discussing Huntington's performance and prospects.